Tesla's wild ride, stock price swings, and the future of autonomous driving. Tesla's stock has been on a roller coaster, rising and falling unpredictably. But can its autonomous driving technology take it to new heights? European sales decline, but investors stay calm. Why? Logically, a drop in Tesla's European sales should make investors nervous. But instead, they're celebrating. Why? Because there's huge news from China. Tesla's autonomous driving system has been approved. China's market is far bigger than Europe's, so investors are naturally more excited about this development. Who cares about minor fluctuations in European sales when the future's looking bright elsewhere? Robo-taxis are coming. Is Tesla's future in autonomy? Tesla is set to test Robo-Taxi in Austin and later in California this year. On top of that, China has approved L2 autonomous driving, which could boost Tesla's sales significantly. But Europe, not looking great. Why are European sales dropping? The new Model Y started deliveries in March, so many customers are waiting. A cheaper SUV is on the way, so buyers are holding off for lower prices. Tesla's monopoly is over for the first time. There are real competitors in the EV space. Tesla was once the only company offering high-range, reasonably priced EVs. Now, consumers have more choices, and the competition is heating up. Tesla's valuation, is it justified? Tesla's price-to-earnings ratio is over 100. Is that reasonable? Some believe Tesla still has massive growth potential, driven by energy storage. Selling batteries is big business. Software subscriptions. Driving could become like Netflix, with monthly fees for features. Autonomous robot taxis, if successful, this could be a cash cow. However, Model 3 and Model Y sales are nearing their peak, meaning future growth depends on new SUV models. Tesla vs. BYD, the autonomous driving battle. BYD is making aggressive moves in autonomous driving, even offering L2 autonomy for free in China. Tesla, on the other hand, charges for its full self-driving SSCD system. Challenges for Tesla in China. Autonomous driving data can't be sent to the US, which may limit Tesla's AI improvements. BYD understands the local market better, giving it a competitive edge. In the US and Europe, Tesla competes more with Waymo, Google's autonomous driving company, than with BYD. Will Robo-Taxi print money for Tesla? Some investors claim that Robo-Taxi will be Tesla's money-making machine, but is it that simple? Potential issues. Market size is smaller than expected. If fares are too high, people won't use them. High operating costs. Unlike Uber, which just takes a cut, Tesla would have to buy, maintain, and repair the cars. So while Robo-Taxi could be profitable, they might not be the goldmine some expect. Will Elon Musk abandon Tesla? Musk has a lot on his plate. SpaceX heading to Mars, Starlink satellite internet, X formerly Twitter constantly tweeting, Neuralink brain-computer interfaces, Boring Company tunnel digging. He's busier than anyone, but Tesla remains his main focus, especially after shareholders voted to approve his massive pay package. As long as the money flows, Musk isn't going anywhere. Tesla stock, skyrocket or crash. Short term. If Tesla expands SSCD approvals, successfully tests Robo-Taxi, or begins Optimus robot mass production, the stock could surge, but expect volatility. Buckle up. Long term, Tesla's future is promising, but stock price swings are inevitable. Tesla investors, fasten your seatbelts. It's going to be a thrilling ride. Rocket Lab stock surges, secures a $5.6 billion U.S. military deal. Rocket Lab's stock soared on Friday after news broke that the company could partner with the U.S. Space Force on a major contract. Stock skyrockets. Rocket Lab shares rose 1% to $18.62 after surging 6.5% in pre-market trading. Meanwhile, the S&P 500 and Dow Jones both fell, making Rocket Lab a rare winner in a declining market. A $5.6 billion mega deal. On Thursday night, the U.S. Space Force selected Rocket Lab for its $5.6 billion National Security Space Launch Program. For a relatively small company, this contract is a game changer. To put it in perspective, analysts only expected Rocket Lab to make $582 million in revenue by 2025. This contract alone is worth nearly 10 times that amount. The Neutron rocket, Rocket Lab's secret weapon. Rocket Lab's current Electron rocket can launch 300 kilograms to orbit. But its new Neutron rocket, expected to launch later this year, will be a game changer. Carries 13,000 kg, over 40x more capacity than Electron. Partially reusable, like SpaceX rockets. To cut costs, SpaceX vs. Rocket Lab. The space race heats up. SpaceX dominates with weekly rocket launches and 7,000-plus satellites powering its global Starlink internet. SpaceX's valuation, $350 billion. Rocket Lab's valuation, $10 billion, 40 times smaller. But with its stock up 360% last year, Rocket Lab is gaining momentum. Is the space industry about to explode? Investors are increasingly excited about space-related businesses. Rockets, satellites, space-based internet, even interplanetary travel. Bottom line, military contracts secured bright future ahead. Rocket Lab's $5.6 billion military deal and Neutron rocket launch put it on the path to becoming a serious SpaceX competitor. While it's still smaller, investors are clearly betting big on this rising space player. CoreWeave CRWV, Wall Street's hottest AI IPO worth buying. The AI market's hottest new stock, CoreWeave CRWV, debuted on March 28 on the Nasdaq, from crypto mining to AI powerhouse. 2017, founded as Atlantic Crypto, helping Ethereum miners. 2018, crypto crash time to pivot. Rebranded as CoreWeave, focusing on AI cloud computing. 2022, ChatGPT exploded and demand for AI computing skyrocketed. CoreWeave was in the perfect position. CoreWeave's big daddies, Nvidia, Microsoft, and OpenAI. Microsoft contributed 62% of CoreWeave's 2024 revenue. Nvidia, both a supplier, customer, and investor, it even rents GPUs from CoreWeave. OpenAI signed a $11.9 billion contract for AI compute power, massive revenue growth, but at what cost? 2022, $15.83 million. 2023, $229 million. 2024, $1.9 billion, 1.20 times growth in 3 years. The problem? Huge losses and high risk. 2024 net loss, $860 million. Cash burn, $5.9 billion. Highly dependent on Microsoft and Nvidia, a risky business model. Bottom line, buy or avoid. Short term, could be a trading opportunity. Long term, watch profitability and customer concentration risks. Is it the next AI giant or just hype? Let's discuss. Don't forget to subscribe, hit like, and turn on notifications.